And if you'd like to ask questions, here we are, gathered here on the S&P daily chart. It's a daily movement. When we called up here on our reversal, this was on 5-2. Once again, on the home page of SMF, that analysis is right there before any of it dropped to here. That's what you want. You don't want to watch a TV commercial or a channel on the or some kind of email that's telling you, oh, it's in a reversal down here. Well, don't you think that's too late? It was all about up here and why, and volatility, and how bottoms are put in on the S&P. I will tell you that when you are putting in short-term bottoms on the S&P, you will have breakouts that happen. You will test the half daily breakout bars and close above it, and you will continue the move. And we called that top right up here. This was on 2/18 back in February. If you go back in February, when we were calling the top of the market, it started with the gap down. So basically, we're 6 months going into the year, right in the middle of calendar 2011, between the public buyers and sellers. Here were sellers, here were buyers. And look at the buyers kept coming back to the market, because they did. And then we have a correction that we call for up here. Bull rallies have bull pullbacks. And what we measure is the distance of the last breakouts. So when we have breakouts, we look at how they start with gaps. We look at how the daily actual double diamond breakout daily bars are working in the SMF platform until we finally plateau. And you know, everything about the application will not steer us wrong. Each one of these movements here on the daily chart are 7.05 price line action. MMT market maker price line, $7.05. So when we called for this correction, your counter rallies are right back up. They're not closing above the half bar. That one was on 5-3 at 13.55 on the S&P. Half bar ratio right here. It gaps down. That's how you know that the original top is in, when there is upside price action volatility to the reversal side and a descending closing below half bars. Look, closing below the last half bar, breaking below that half bar until we finally got down here and we pop up. We have a good daily buy bar. We have no follow through. And these last 2 down days, this up days is the holiday week here. We are above 1322.98 right here on the S&P 500, which technically is, once again, technically in our system, is if we can consolidate above 1322.98 on a daily basis, or drop down and start bouncing with green bars of this nature on the breakout side, everything would be at a turning process. However, the prior week, today's date is 5/28, and it's Saturday, it's Memorial Weekend, and we do wish everyone a great holiday, because we do. So it's very important. This half bar up here on the S&P 500 is 1336.34. We would have to close above this top level and consolidate with immediate daily bull buyers in the market to confirm that this bottom is in play. So far, every single attempted breakout here has been a head fake, and there are reasons why. And we came back with bigger sellers than the last set of buyers off each one of these attempted support levels where they failed. And now we're repeating that, and we're going in the month of June. Here is a close-up of the reversal to the counter rallies, and every reversal has upside volatility or upside counter rallies. How do you verify? You verify when they're closing below the daily half bar. And this brought bulls in, but then it shook bulls out. Now we have a 3-day area that we're going to be looking at on the S&P. This is the key number, 1322, 1336 in a consolidation above. The next area of resistance will be 513 on that day, 1341. The next area above that will be 1345, and naturally right there at that half bar at 1353.89 to the upside of resistances within upside volatility within the overall last top 52-week high reversal. So we have to consolidate, and you're going to have this kind of breakouts. You're going to have this kind of daily breakouts that start from the opening bell, and broad-based buying would be across the board, and that would confirm. Now, if you drop down here to this half bar at 1321 and you consolidate that with a big follow-through, that would be the retest. However, if you come down here to 1318.83 on that bottom and you break it, well, the next area of support is going to be right over here at 1308.34. And then if you break the lows of 1304.03 within where this original bull daily cycle, this was the last good bull cycle to that top of this reversal on that S&P in our SMF platform. Now, having said that, if you take a look at it on a 60-minute level, the S&P, you can see where the bigger down movements were. The 60-minute bars here never did close back above that half bar, and you had a key big reversal on a 60-minute hourly movement in the market. And then it comes back up, but it never did close above that half of that 60-minute bar. No, it did not. Here, let's pull up the hood and take a look at it. No, it did not. 1345. And it went down, and it had 60-minute volatility tops. It never did close above it, but the next 60-minute bar broke its back, and then bam, and this is what that bottom looks like on that 60-minute chart on the S&P 500. And those 3 daily bars is part of this overall movement. However, if we do not bounce up and take out this major area on a 60-minute with big 60-minute buy bars like these, we're not going higher. And we do have a good start here on a 60-minute level, and we do have a pullback here to 1329 and a closing price at 1331, 2 handles above it. The key is this half bar right here, 1338 on a 60. This one over here, 1341.64, and naturally the swan dive reversal at 1345.11 that was on 519 during that topping volatility process. So that's the upside if we do get the breakouts like this, or the beginning, and when they do break out, they closing up here at the top and making higher highs. And that's what it looks like from a 60-minute view. The 3-minute view into the closing bell on Friday, you can see where the big red bars went straight down, because you can. And went straight down right here, and then it came straight back up into the close. That's how it closed. So we're going to be watching what that opening bell will be like on a shorter time frame. You hear me?